you. We're going to move on to the next section now, which is questions relating to fund performance. Your 3-year performance has been spectacular. Is your diversification sufficient in the event of a bubble bursting? That's a question from Graham in Romsey.
So in terms of diversification, I think if you refer to some academic study, 30 to 40 stocks is where you get the most diversification in terms of running a portfolio. So I think from our perspective, investing into the best of 25 to 35 names, that we feel the diversification purpose has been served within the fund. And how do you avoid bubbles? I think I outlined earlier is like you just make sure that you can avoid those companies that are not trading in line with fundamentals. And it's not about how many stocks that you have in the fund, right? So let's say if we are running like 100 stocks portfolio and 100 of those names are the bubbly stocks, like you have like 10 multiple of Tesla, you have multiple of Airbnb, multiple of DoorDash, etc., then that diversification means nothing, right? So it all goes back to what you actually own in the fund. And we believe that the 30 names that we have in the fund as of today, they are very high quality businesses and their valuation are quite reasonable. And last but not least, I think it's worth pointing out that most investors, typically they would invest into more than one fund. So I wouldn't expect that someone would just have maybe 100% of their investment tied to the Blue Whale Growth Fund, for example. I mean, they would be holding 5 to 10 funds across different asset classes. And the way to get most diversification from an investor perspective is to invest into different asset classes. So Blue Whale being a global equity fund, we are one of the asset class. And I'm sure investor would have investment in some sort of property or the places that they're living. And they might be investing into fixed income product as well, etc., etc. So basically, that is how you get the most diversification if you're talking about investing from your personal perspective. But from our perspective, I think 30 to 35 stocks is perfectly fit the purpose.
Thank you. Why did the fund perform well during the 2018 downturn? And do you think this can be replicated in a future correction? That's from Mark in Cheshire.
Yeah, this is a very good question because I think last year that we have done quite well, relatively well, relative to a lot of peer group. And we have been asked a lot about, oh yes, because Blue Whale has done well because of digital transformation, because the interest rate was low, etc., etc. But thank you for this question that we should remind our investors that back in 2018, the Fed was raising interest rate in Q4, and that's the reason why the market was in a negative territory, and the fund was in the positive territory. And so we have gone through quite a few mini cycles over the last 3.5 years we started. So we had the Fed raising interest rate in 2018. We had a very strong bull market in 2019, and then we have the pandemic last year. And we have the Fed cutting interest rate, and now maybe there's an expectation they could be raising interest rate in the next 12 to 18 months. So I think, but what is interesting is we have not changed our approach, that we like companies that are quite high quality. And another way to define high quality is we want that earnings growth trajectory to be independent from any of these macro uncertainties. So whether interest rate is at 2% or at 1% or even 3%, our companies will still be able to deliver the earnings growth trajectory that we expect them to do. If that is the case, then it's more likely that the share price would behave in a similar manner, which means that we should be able to do better than the market. So I think if you put all this together, that we always try to be able to do better than the market. But one thing for any investor, you should remember that this is a long-only fund. This is not an absolute return fund. So if the market is going to be in a negative territory in a quite severe manner, that this fund will lose money. And we have seen that in Q1 last year during the pandemic, the fund was down about 8% in the first quarter, and versus the market about 15%. So we have done better than the market, but we still lost money in that quarter. But luckily for us that we have made up all the losses in Q2 and Q3 afterwards. So I think it all comes back to your time horizon, that if you're asking us, can we protect losses in the next 6 to 12 months, I think that is out of our hands. But if you take a medium-term view in terms of investing in our fund, which is a recommended period of 5 years, then I think that hopefully that we should be able to make money for investors.
Thank you. History has shown us that funds start off great and beat the market, but then continuously fail to do so. What are you doing to ensure that this does not happen to Blue Whale? That's from Adam and Lester.
It's always possible that people can, including us, could be one-time lucky, and it's also a question that we keep asking ourselves, whether we have any sustainable advantage versus our competitors or any other funds that we are competing with. And I would give you maybe one scenario. This is quite similar when we look at high quality businesses, because you could be looking at, let's say, the likes of Amazon 10 years ago, and then you would say, oh, Amazon has done well because Jeff Bezos was working quite hard. They came up with all this innovation. They have been expanding their market share in different country, etc. And then at some point, Amazon would stop being a great company because they just got lucky that they have managed to do that within that time horizon. But then I think the history have shown with hindsight that Amazon have continued to innovate and take market share and continue to come up with better products, services for consumer like us, and we like them even more. So that competitive positioning as a company in the space that operate have actually improved dramatically over the last 5 to 10 years. And as we speak now, it's continued to improve from this point onwards. So what do we do with Amazon? A company such as Amazon is, you can't just sit back to say, okay, we have done our research, we know what they're doing, and then we just never look at that again in the next 5 to 10 years. You can't do that, right? Some things could have changed, and that's what happened with a lot of great businesses. And at some point, they just stop being great businesses and become maybe lower quality. So that is the process that we do when we look at companies. So I think for investors like you investing into fund like us or some other holdings, I think you should apply the same process. And that's exactly the reason why we are here today, to answer your questions. And what we're trying to do is to help you to understand what we want to achieve for this fund and how we think about things. But if at some point that we fail to deliver what we set out to do, then maybe you should be voting with your feet and sell our fund. I think that is why we're putting ourselves on the line here, that if we do well, hopefully we would receive your support. But if we stop doing well, I think it will be wrong to ask for the support, because that is the kind of why we're here in the first place.
Yeah, good answer, very honest. Well, that concludes the questions under the second topic. I'll quickly remind viewers that they have until 1:30 to submit any questions which they would like us to cover in the second half of the session.